Hi, everybody, and welcome back to EBnet.Stream. We recently published on our publications podium Prescient Fund Services ETF Evolution report. I thought I'd reach out to Niki Giles, who is the head of strategy at Prescient Fund Services, to perhaps explain some of the detail of that report and the need for more reporting. So welcome to EBnet.Stream, Niki.
Hi, Nathalie. Thank you so much for having me today.
You're welcome. You're welcome. Let's start at the beginning when it comes to ETFs. Perhaps you can give us a little bit of history and why the need for this report, another report.
So this year, ETFs in South Africa turned 25 years. So
Wow.
the first ETF was listed on the JSE by Satrix in 2020. And so we're celebrating 25 years. But until probably about 3 or 4 years ago, not many people knew much about ETFs. They knew there were these index tracking products that sat on the JSE, but they really didn't attract as much investment interest as they possibly have in America, for instance, or in Europe. And it was only recently when the JSE allowed active ETFs, which was in end of 2022, that there's been more interest in an ETF and how it fits into kind of the investment infrastructure. And so we just thought it's an opportune time to educate the market just on the history of ETFs and giving some background into how they work, what's the use case potentially for them, etc. And hence the report.
Perhaps for somebody who hasn't picked up the report yet, what can they expect to learn when they read it?
I think there's something for everybody in the report. We did try to make it quite broad. So there's information for the retail investor, giving some background into ETFs, the history of it, maybe, as a retail investor, how you can access ETFs. But there's also information for asset managers who may be thinking about launching an ETF and just giving them some information in how the ETFs work from a liquidity perspective, who the market participants are in these products. And then maybe, for somebody who's just interested in ETFs and learning a little bit more about them and where they're going in the future. So there's something for everybody, I think, in this report.
At EBnet, our community is made up of institutional and retail investors, and you've used both those words in your last answer. So what kind of role, and let's start with the pension funds, the institutional investors. ETFs are not something that typically a pension fund board of trustees or a management committee would be talking about. Is there a role for ETFs in institutional investments like retirement funds?
I definitely think so. I mean, from a historical perspective, ETFs have been index trackers and they're low cost. Some of them are. We'll talk about that later, maybe. And so definitely as something that can be included within a portfolio, ETFs have definitely got a place. So, whether you're wanting to attract just a broad-based index, it'll add that kind of low-cost element to your portfolio construction. As a selection for your members, if you're wanting a balanced fund now, with AM ETFs in the market, there are some that are coming to market that are Reg 28 compliant, and so can be used as just a standard product within a retirement fund. So I think there definitely is a use case for them. I think people just need to understand how they can be used. And I think it's not necessarily, we're going to replace unit trusts with ETFs, but I think there's a place for both in the portfolio construction.
And that brings us to the retail investor, because before I started recording, for those of you out there listening to this, I was telling Niki that I recently have invested in my first ETF. So having had conversations with Niki and her colleague Kim, I was kind of intrigued by these investments. And so I went and invested in an actively managed ETF. And I won't tell you through which service provider, but so far so good. And so that brings it into the retail space. I kind of looked at it in the same basket, for want of a better word, as unit trusts. I mean, what are the differences between ETFs and unit trusts?
Okay, so I think what we need to understand is that majority of ETFs are unit trusts. They're just listed on the Johannesburg Stock Exchange. So I'm not going to get too technical, but basically the same regulatory environment is around an ETF. It is a collective investment scheme, and it acts exactly like a unit trust. The only difference from a regulatory perspective is that it's listed. So then it comes down to accessing the ETFs. I think historically, if you wanted to access an ETF, you had to have a stockbroker. And so in South Africa, that generally meant it was kind of high net worth individuals that would invest into ETFs if they had access to a stockbroker to invest by the JSE. Most retail clients would have rather gone to a LISP to go and invest into the unit trust. What's happening now, and I think there's a bit of a chicken and egg situation with ETFs, is that we are finding that there are more digital platforms that are coming to market, which are allowing retail investors to have their own stockbroking account and to trade directly onto the JSE. And so they will have access now to these ETFs. And what's great about an ETF is that you don't have to have 10,000 Rand, for instance, to access that ETF. So, a lot of your platforms for unit trusts, they want you to have a minimum size when you want to invest. Whereas trading on the JSE, as long as you have enough money to buy a whole unit, which can be as little as 10 Rand, you can buy an ETF. Now, I wouldn't advise buying 10 Rand because there are some trading costs involved, but it does mean that if you are only able to save up a couple of 100 Rand a month, you can invest directly onto the stock exchange via these platforms. And so that's opening this market up, I think, to retail investors. Also, the number of funds that are available will help. So as I said in the past, it was just index tracking funds. And that's also great because a lot of those have got quite a low cost to them. So their TER, which is the term we use on even unit trusts as to how expensive these are, were fairly low as index trackers. So they're a nice, cheap kind of way of accessing the market and investing in a number of shares, but via one bundled product. But with the advent of active ETFs, we're seeing more and more of your traditional managers coming to market with an ETF that's actively managed. So the asset manager has discretion, which you can now access via your digital platform. And those are being offered by a lot of people's bank accounts. So if you have a bank account, online bank account, the banks are now offering you that access. So I think that's what's making this attractive to the market, is it's a different way of distributing a unit trust. And it's being done on the JSE.
EBnet is proud to bring you top quality content from experts across the financial services industry in South Africa and internationally, all for free. Your support helps us in doing this. All we ask is that you subscribe to our channel by clicking the subscribe button below, share this video with others you think will benefit from it, and give us a thumbs up if you are enjoying the content. That way, you help us help you. Thank you from the team at EBnet. For more great content, please visit www.ebnet.co.za.
I'm so glad you talked about, it's not just available to high net worth individuals, because I myself am not a high net worth individual. And the offer of an ETF was made available to me through my online bank and through an online platform. And so it literally was as easy as picking a theme, which is what I want to get to just now, these thematic type of products or portfolios or baskets. It was literally as easy as picking a theme, and the money went out of my bank account, and so it went. I can also say that it was also very cheap. My money wasn't, divided in half. When it was invested the next day or however long it took to buy the portion of the portfolio. But so yeah, definitely an easy way of saving. And for me, I kind of thought, is this expanding the savings ability or net within the country, or again, are we just moving the same money around into different products? And I know in your report the words democratizing access to investments were used, and I jotted them down because I thought that's very interesting. Perhaps you can share a little bit more around that. In what way do ETFs democratize access to investments?
Yeah, so yes, I think Look, obviously there is the same money that might move from a normal unit trust into an ETF. But I think the fact that you can come to market and invest smaller amounts does mean that somebody with a lower savings amount can get into the market much quicker and have access to these types of products. So I think that's really from a democratizing perspective. The other issue is that when an exchange traded fund lists on the JSE, it can only list one class. Whereas if you have unit trusts can have multiple classes depending on fees. So that's what distinguishes unit trust classes. And oftentimes you'll have an institutional fee class for your institutions who are investing a large sum of money, and you'll have a retail fee class for retail investors. And the retail fee class is normally the most expensive fee class because you're coming with smaller amounts of money. But because you're only able to list one class on the JSE, whether you're institutional or retail, you're getting the same fee. So that's quite an interesting concept with your ETFs and your AM ETFs, is that it's one fee class available to everybody who ever comes to the platform. So that's the one thing. And then I think from a democratizing perspective, it's also the fact that if you have access to the JSE, so you have access to every single ETF that's listed. So, a lot of times if you go via a list platform, you'll have access to whichever they have made available on their platform.
Okay.
Whereas if you go to the JSE, you have access to shares, all the shares that are listed,
Yes.
as well as all the ETFs. So as soon as an asset manager lists an ETF or an AM ETF on the exchange, you have access to it. You don't have to ask somebody to put it on to your platform to be able to invest into it. So there's a lot of, nice benefits to accessing these ETFs.
Look, I have to say it works like a bomb. It was quick, it was easy. I picked a theme. For me, it was AI. Given the hoopla, it should have been gold, but I don't know. I don't know who's going to win that one. So far, we're both winning. But it was very easy. And much more easier. Now, it's not, I don't have a favorite child, but much more easier than my unit trust investments, which, as you say, did take some time and some pondering. And the fees, as I say, are relatively cheap. Let's go to this theme idea. So ETFs in the past have always been kind of index trackers, boring. Now we have this actively managed scenario. Now, I have to tell you right up front, I'm a passive investor. So I'm not sure that value is added via active management, but I have invested in an actively managed ETF. And so these themes, how does the manager go about putting these themes together? Is it based on demand? Is it based on his or her call of where the market is going? Or how are these themes put together, and what can investors kind of look for? What buckets or categories could they look for?
So I think you're basically talking about thematic ETFs, and a lot of those have been in the index tracking world, actually thematics, but you are seeing them now more and more as well in the active side as well. So from an index perspective, the asset manager would choose a thematic index. Could be, as you've said, AI, it could be health. Offshore, it seems to be defense. So defense has been quite a big one in Europe. And they will then pick the index that they think best represents that theme. And they will provide that as an index tracking ETF for the market. They're not going to provide every single thematic index out there, because they will look for what they think investors are going to want to invest into and where they think the market is moving. So, hopefully whatever you're going to invest into is worthwhile and is going to, grow over time. So you're not going to find every theme out there, but you will find that, the topical ones are available. Active asset managers can also have a thematic based fund, which is, I think, where you've gone. So once again, they are, choosing a theme, but they've got the discretion now as to which companies to include into the ETF. So they don't have to follow exactly what the index is investing in. They can take a call based on what's happening in the market and move in and out of the various underlying funds or securities that are sitting in that. And then you'll go right through to your proper active asset managers who are not necessarily choosing a theme, but are doing a general equity fund or even a balanced fund. So I think, the passive is great, and don't be confused between passive and cheap, because thematic passive can be quite expensive based on the cost of the underlying index. So the asset manager has to pay to track the index, and some of those indices can be quite expensive to track. They have to pay quite a lot of money. So you can't necessarily say because it's index tracking it's going to be cheap. So you've got to look at the various options out there and have a look at what the management fee is that's being charged. But it's difficult, obviously, from you're not going to use thematics really for a balanced fund, for instance. So that's where your active manager comes in and can provide a broader base of assets within one product that's listed now.
What might be a very dumb question. Do all ETFs cost the same?
No, they don't. Definitely not. So as I said, you do need to have a look at the minimum disclosure documents or the fund fact sheets as to what that total expense ratio is. What is the management fee? What are some of the costs that are being incurred in there? If you have a fund that's, say, tracking the top 40, it's a relatively low cost index to track, and it's a large fund, so percentage-wise the costs are low, then you're going to find it's going to be a cheap fund from a cost perspective. But as I said, if you've got a thematic index that's being tracked, it's going to be more expensive. And if you've got an active managed ETF, you're probably going to be looking at a very similar fee to what you're going to be paying for a normal unit trust, because it's the same asset manager. They're doing the same job that they would be doing for that unit trust. It's just now packaged as an ETF. The other thing you also need to remember is that an ETF does have a couple of extra costs to it, because it's listed on the Johannesburg Stock Exchange. So not only are you paying your normal fees or normal costs around running a unit trust, but you also now have to add in a little bit extra for the cost of having it listed. Not a significant amount of money, but all things being equal, in theory, an ETF could be more expensive than a unit trust. But then you have all the benefits of the intraday, the ease of access, etc., that come with it.
I think such a good analysis and such a good explanation of kind of where we've come in the evolution of ETFs from, passive into more active. I mean, everything I read is ETF, ETF, ETF. As I say, it was a conversation with yourself and Kim that kind of persuaded me to go and dip my toes into the water of ETFs and investing in them. What does the future look like? Where does this conversation go to next? I mean, are we looking at a consolidation of unit trusts and ETFs? Probably not, but are we looking at the death of unit trusts? Where does this conversation go, in your opinion?
So I think we need to be careful about saying that unit trusts, ETFs are going to replace unit trusts. I think there is a place for both. And I don't think it's necessarily an either or at the moment. I think as active ETFs have been now allowed and asset managers are kind of understanding this as a product, we are going to see more and more listings in the market. So I think you can expect to see quite a few more active ETFs listed even this year still on the JSE. And if we look offshore, we look at Europe. There's a lot of noise around ETFs and active ETFs, but the market is still small, compared to your traditional unit trusts that are not listed. So I think from an ETF perspective, a lot of noise. I do think we will see more listings. I think as people get comfortable with your digital platforms and being able to trade directly, I think we will see more retail investors coming to market. I think younger investors who have maybe kind of cut their teeth or got used to trading on crypto platforms where it's instantaneous are going to prefer an ETF, because the way it trades is not quite the same, but it's similar than trading necessarily via your traditional platforms for unit trusts. So I think all of that will have an impact on the growth of ETFs that we will see. And as we get more and more in the market, there'll be more and more competition. Potentially that could lower costs and lower fees, which we hope for. But yeah, I think we're fairly bullish on it, and hence why we're in that market as providing a platform for asset managers to be able to list ETFs.
Back to the report. So we've had the great conversation around what ETFs are there to do, their kind of benefits, and the kind of new age platforms that are available and really are available to everyone. Trust me, if I'm investing, it's relatively easy. I don't trade crypto. But back to the report. What would be the one overriding highlight you'd want everybody to kind of leave this conversation with today?
I think for me, what's important is that people understand what an ETF is and that they start educating themselves about them. They're not going away. So understand what they are. Maybe have a look and seeing whether it is something that you want to include in your portfolio of investments, whether it's, you're starting out investing, whether you're an existing investor, it's a product. Don't be afraid of them. Learn more about them. And then maybe if that is, the product that you think is good for you, go out there and invest in it.
Niki, it's always been an absolute pleasure chatting to you today. So thank you for taking a little bit of time out of your day to chat to us and inform us and educate us on ETFs. I look forward to more of these conversations, and hopefully they will all be good and positive for me particularly.
Thanks very much. And I'm really glad to hear that you've started your journey in investing in ETFs.
I'll keep you posted. Thanks, Niki.
Thanks.